It's time for the big three. Three stocks, three charts, three trades. Rick Ducat will take us through the charts, and here to take us through the trades, Scott Bauer, CEO of Prosper Trading Academy. Thank you both for being here today. Scott, before we get to Zscaler, just a big picture on the market. Your thoughts? How are you feeling?
You know, it's hard to feel downbeat at all, obviously, with, record after record, but I think that we have to be very cautious. I want to be cautiously optimistic. Let's put it that way. Perfect time to be buying protection with volatility so cheap. I'm not sure that the fundamentals of what we're seeing out there are supporting record high after record high. To me, there's just a bit of a concern that, there's so much going on geopolitically, politically, and, with the Fed, of course. But you know what? It's hard not to just follow the trend here.
Understood. All right. So right now we're taking a look here. Zscaler is up today, up about almost 3%. Some of your thoughts as this is trading around 207, 208 today.
Absolutely. And, cyber stocks across the board kind of were out of favor for a little bit here. You look at CrowdStrike, Palo Alto, Zscaler. I really think of those three, which to me are the best in class. Zscaler really has the biggest and quickest upside potential. If you look technically at the charts here, we just reclaimed the 200-day moving average about a week or so ago, and it's traded pretty sideways above it and holding that area until today. And we're seeing a nice pop today. So I can really see us filling the gap, which happened last earnings, up around 240, 241 area. So based on that, I'm buying the August 16th expiration, 210, 230 call spread. It's about $4.50, maybe a tad higher now because the stock has rallied a little bit here. But, I think cyber is back in vogue here, at least in the short term.
Yeah, this is, we heard, for example, Rite Aid had a cyber attack. And so I saw that in some of the headlines. Let's talk about the chart here. You mentioned the 200-day moving average, Rick. Good morning to you. Zscaler, please.
Yeah, we have indeed been on the move to the upside recently here. And it was looking perhaps a little less agreeable for the bulls here. After we had the sharp sell-off from our yearly highs here, we kind of trended downward for a while, then stabilized a bit here near our volume profile point of control. This thick red line, it's our area of heaviest trading near about 173. So some sideways movement for a while. We stopped repeatedly at this green line here, which represents the 182.50 level. So a frequent source of resistance there that we were eventually able to push above to the upside after some conflict here, some back and forth above that line. We ultimately did play out to the upside. And right here was a crucial point. We broke above all three of our moving averages that we follow: yellow 21-day, orange 63-day, purple 252-day exponential moving averages. So I don't have exactly the same 200-day SMA that Scott was referring to, but the general theme is the same here. We had a push above our moving averages. We're pushing up to the upside. We're in a rising wedge type shape here that we're near the upper edge of, and we're near about 210 or so. The gap that Scott was talking about is here. That red line here is about 227 here. So that would line up pretty closely with that 230 strike that we're looking for this trade here. RSI still trending upward, momentum moving nicely to the upside, just a hair below the overbought area. That would be another good sign for the bulls if we were to move into that area and break out above this pattern, Nicole.
All right, thank you for that. And and obviously, Scott, you also mentioned some of those other names in cybersecurity. The group overall seems important to you. Thank you for the charts, Rick. Final thoughts, Scott?
Yeah, regardless of the moving averages, Rick was using some exponentials. Mine were simple moving averages. Again, all in the same general area. And I think the bulls are back in control here.
All right. Next up, we have Coinbase, which today, if you look at Bitcoin, I know they're not exactly correlated, but it's certainly a risk on trade. We saw Bitcoin up almost 10% today. Coinbase is up 11% today. What do you think of this move, and how would you go about a trade?
It's an impressive move today, and it's for a multitude of reasons. As you said, Bitcoin is up 10. This is up 11%. They are pretty pretty typically correlated over the last, 6 months or so. However, I am looking at the Mt. Gox situation, which is still not over with. There was certainly a lot of pressure over the last 2, 3 weeks because of that situation. It is not over yet, though. And I think that maybe there's a little bit too much exuberance from some of the things that we saw over the weekend in Coinbase here. Longer term, I like it. I'm still a little bit bullish, but I'm looking at a shorter term reaction or action to an overreaction of this big move to the upside. So I am buying it's very short term, going out a couple weeks. The August 2nd expiration, 235, 225 put spread. I can buy that for about $3.50. It's not going to take really much at all for something to come out, any news in the crypto space, Bitcoin, or anything that, anything else that really happened over the weekend, for this to just turn around pretty quickly.
Yeah, and also, with a move of 11%, then you have maybe a little more room for a bearish trade. Let's see what Rick has to say about the technicals.
I mean, interesting chart once again here. Very strong rally earlier in the year. We're still up more than 247% from those 52-week lows, even though we have pulled back a little bit from those 52-week highs that we've experienced here. Now, when we look at our trend lines here, there's a couple different things we would consider. First, we could have this blue trend line going across the lows that has been broken here. However, look at where we stopped during our past two rallies. Our old support trend line has become resistance now, so it could be worth keeping an eye on here as we move forward. We've also got this downward sloping trend line going across the highs, so a couple potential spots of resistance to keep an eye out for. And remember, this downward trend line going across the highs has not been broken yet, so this is still, fully in play. The overall trend is kind of, we've got this downward price action here. We've got perhaps a supportive area a bit lower here. You could even maybe draw a kind of a triangular pattern here with this white trend line, starting with the low point that we saw here near about 194 or so. Now, RSI kind of triangular as well here, bouncing around that 50 midline here, but we are above the 50 midline now, so things are more in the hands of the bulls right now. So if we were to kind of try to think about this move in terms of support and resistance here, if we do push to the upside, 264 represents the spot where we have topped out repeatedly. That's this red dashed line here. That would be the point we'd need to break to make some lasting gains here. But, to the downside, I'd like to highlight one thing here. We've got our 21 and 63-day EMAs right on top of each other there, around 226 or so, very close to Scott's strike price. Once again there, I believe he said 225 for the other end of his put spread there. Also got a volume node right there too, so an area of heavy trading. This is a noteworthy technical point for several reasons, really, Nicole.
It's interesting that you point that out and seeing them all together right there at this point. Scott, final thoughts here on this name, and then we'll get to Costco.
Absolutely. As a trader for a very long time, I like to look for opportunity when there's a lot of emotion involved in a certain stock or the overall market. And I think there's a lot of exuberance, a lot of emotion in this move in coin. So I'm looking to take the other side of it right now.
Okay, understood. And then last but not least, you have Costco. This, as we're waiting also the Amazon Prime Day to occur. Maybe there'll be a lot of excitement around retail or not. Some of your thoughts. It's certainly at a high point right now for the year.
You know what? Costco is bottom line, it's best in class. So anytime I see a big dip in a particular stock in a sector where that stock is best in class, you have to take a look at it and you have to consider it for a rebound back. And you know what? Costco just came down to some really big support. It's hard to say, boy, there's support when it's only, $40, $50 off of its all-time high up around the 900 area. But there really is a lot of support, or was a lot of support before this nice move today. So I think it may take a little bit more time to recover and maybe get back to those all-time highs up around 900 or so. But I love this stock. So I am giving this one a little bit more time than the others. I'm going out to August 30th, so we've got about 6 weeks or so. I'm buying the 880-900 call spread, which costs about $5. Great reward to risk on this. And as long as not just retail, but as long as the market just kind of hangs in here and maybe grinds a little bit, I think Costco has a real opportunity to get back to those all-time highs.
Yeah, as you said, also a best-in-class type of name, so you have some time to get to those higher levels. Let's see the technicals, please, Rick.
Yeah, really strong chart here. Once again, it's hard to find too much fault with this thing here. And, you know, ever since we topped out here at this light green line, this represented our high point around earnings near 787 or so. Once again, topped out there and then bottomed out there. So this is why we look for these kind of sticky price levels. They can be, once again, resistance turning into support. So something key to watch. And, you know, that's another thing I want to touch on is this area of support that Scott mentioned. We've bottomed out near 840 many times here within the recent, you know, maybe month or so, month and a half. So we've also got a big volume node here right around 850 or so. So once again, a key area that we have been progressing kind of sideways through here. So today we are peaking above our yellow 21-day exponential moving average. We're just slightly above it, just a couple bucks above it at this point. It'll be really interesting to see if we can hold above that point as we head into the close and try to find a foothold for the bulls to regain some traction here. When we look at the RSI, we can see we did have a bit of bearish divergence here as price made those new closing highs. It did indeed translate into a drop-off here. Now we're finding ourselves hovering around that 50 midline. We are back above it here in terms of the RSI. So if the bulls can keep pushing to the upside, you know, once again, we topped out here around 874. So, you know, 880 or so to 900. That's our red and pink lines here, respectively. That's roughly the range Scott is talking about. So looking for a return to those 52-week highs, maybe even a little more there. But, you know, those are the key points, 840 and 880 to 900.
Okay, thank you for all of that. Good charts, Rick Ducat, and that's our own Rick Ducat and also Scott Bauer. Thank you both for the big three today.